please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, since we're talking about the comparisons with Jio and telecom, it's now down to a three-way fight in the Indian telecom market. But Mr. Gurcharan Das is waiting by to make a comment. Mr. Das, you heard what Mohan Das Pai had to say, what Mr. Dua had to say, as well as some of the others. And I think there is a fair degree of realism, perhaps even skepticism on how this whole agri-tech, agri-supply chain, modernization of the Kirana store, last-mile connectivity, etc., is going to play out. I know you believe differently, sir. Go ahead, make your point.
Yeah, well, I don't think that this is going to happen overnight. But I have seen Walmart operate very, very closely. And I've seen them operate in China. I've seen them operate in the Philippines. I've seen them operate in Indonesia and in Africa. And one of the things that's in the DNA of Walmart is the agricultural supply chain. That is the strength that they will have over Amazon. Amazon is way ahead in e-commerce over Flipkart. That's not the winning game as far as Walmart is concerned. In fact, Walmart believes that India is actually going to be their test market for the world, because even in the United States, they're now finding that they will have to go online for a very large part of their business. And the old big box store is not going to be the same for forever. And so this for them is a very high stakes game. And India is a very important test market. And that's why they're willing to invest so much money. So I'm not suggesting it's going to happen overnight, but I'm horrified that somebody like Mr. Dua has said that there should be controls, that government should get into this whole business of controlling e-commerce and so on, because this is what is killed. This is what was responsible for the license permit Raj. And this is what, if, fortunately government did not get into IT. Otherwise, IT would never have gone where it is. So let's hope what Mr. Dua is suggesting does not come true. The reality here is that it will take time, but what you have is a company whose DNA and whose core strength is related to working, to bringing fresh food. And the biggest disappointment that I had with Reliance Fresh was that they failed. They failed because it was not in their DNA to bring fresh food into the Reliance supermarkets. And this is what makes Walmart
very quickly
and this is what gives competition. This is what gives competition.
Let me get Mr. Dua to respond to. Let me get Mr. Dua to respond to you, Mr. Das. Mr. Dua, go ahead.
Yes, Shirin, it was in the context of FDI policy that I made my comment about the policy for e-commerce, not in the context, as has been just pointed out by Mr. Das, that we are talking about a policy to regulate retail business in India, which is relatively, or if not completely, a free sector, and that is why we've seen a lot of it mushrooming, some well, some not so well. FDI, the world over, is regulated. Every segment of in every segment of the economic activity, there are rules and regulations the world over. We have FDI policy for multi-brand retail. We have FDI policy for single brand retail. We did not have an FDI policy for e-commerce, thinking that it is a very small segment of the Indian economy, Indian retail economy. But we have seen the way the growth has taken place, whether it is the growth of Amazon or Flipkart, which is already a $2.6 billion annual turnover, though it has about 45% of it still, in the red. It's making a loss of 8,700 crores or whatever figures for last year. FDI policy for retail is the subject which was discussed in the DIPP meeting which you referred to. Otherwise, it is retail is not the subject matter of DIPP. It is of the Ministry of Consumer Affairs, about which I am afraid Mr. Das isn't very properly informed, that he referred to. The FDI as a subject is nowhere in the world completely left to market forces to be determined.
No, that's right. That's right. But you know, since we were talking about what this means now for Indian
Thank God we didn't have a policy.
Okay, thank God we didn't have a policy like we didn't one for IT, and which is why, as Mr. Das points out, the IT industry flourished. But let me go back to Shanti. Shanti, what is this now going to mean in terms of further consolidation? You know, we were talking about numbers. I'm taking a look at Flipkart at $20 billion. That is the valuation post this deal. I'm looking at one of the listed companies, Avenue Supermart, that runs DMart, 90,500 crores. That's the market capitalization of Avenue Supermart. Future Group, Mohandas Pai was talking about it, 55,000 crores. That's the market capitalization as far as the Future Group is concerned. You know, so outside of the big boys club, so to speak, if we were to include some of these guys into it as well, what do you see happen now as far as some of the independent, you know, startup entities are concerned in this space?
I think it's a little too early to talk of consolidation about the startup ecosystem. I think we're still very nascent, but I think Flipkart has been leading the way. They've been there for a decade, and what they've achieved in a decade is actually pretty commendable in terms of the valuation they've achieved. But I think it's probably too early to talk about consolidation in the startup space, just because I think we are still seeing the valuations are not as high as what you would think just because Flipkart got the $20 billion valuation.
Okay, Mohandas Pai and Saurabh Srivastava, let me put that same question to you. Mr. Pai, let me start by asking you, do you agree with Shanti that it's perhaps too premature at this stage to talk about further consolidation, whether it's investor-driven or otherwise? I mean, what about the shop clues, the big baskets, etc. of the world? What happens to them now?
Well, look at the big IT. Big IT, there are universal players and now niche players, right? Now, when you have a future group, you have a Reliance, you have a Flipkart, Walmart, and you have a, Amazon. The smaller players are doing the same thing. You'll have to be very specialized niche players, or nobody's going to give them capital. Why you pour capital down a hole to compete with these big giants, knowing they can outspend you any point of time, and you lose money, unless you're an Alibaba and you have a pretty big ego that you want to control India. So this is for the control of the Indian market. So I think there's going to be further consolidation unless they become specialist niche players. For example, Big Basket is a very specialist niche player. It makes sense for an Amazon or a Walmart to go buy Big Basket at maybe 3 or 4 billion. Hopefully 3 or 4 billion, because we are investors indirectly and we also need a big pop-up. So I think, there's going to be consolidation, definitely. Because you can't fight the big players with that kind of capital. The game is over. It's only for the big players.
Yes.
If I want to add...
Saurabh Srivastava, would you agree the game is over for the other players?
I have a nuanced answer to that. I think the game for players who are trying to be everything to everybody is going to be very tough. And it may be over, but it's only going to be very tough. But as Mohan was saying, there are going to be a whole lot of different areas and niche areas and how people operate. So, he talked about Big Basket and all the rest. So I'll give you the example of InfoEdge, where I'm on the board, Naukri.com. Now, they've had big global players, several times their size, come and try and grab the Indian market. Nobody has succeeded. They've all retreated. Naukri now has 70% market share. People have given up trying to get its space, right? And one of the reasons is that they used something that works very well in the Indian market, which was a combination of the net and some feet on the street. There was a different model, and nobody could deal with it. And I think if you look at some of our retailers, they will try different things. The Indian consumer isn't necessarily the same as the American consumer yet in every way, whether it's affordability, mobility, what they'll do on the net, what they'll do on the ground, how comfortable they are. So I do think we will see some competing models emerge. We will see some innovation emerge on how, for example, kirana stores are packaged into the system, which has not happened in the U.S. at all. So you will see a lot of innovation, a lot of competition, a lot of different models. And yes, of course, consolidation is going to happen. But I think it's going to be a very, very interesting few years in front of us. And all of us as consumers, our prayers have been answered.
Well, you're saying the consumers' prayers have been answered. You know, I want to bring to the notice and attention of each of you. It's an interesting comment, and this is coming from Snapdeal. This is the spokesperson of Snapdeal sending in a comment saying that this deal reflects the immense potential and attractiveness of India's e-commerce sector. We hope that this new and other existing entities will work as genuine and lawful marketplaces, supporting and not displacing small sellers. As India's largest genuine marketplace, Snapdeal continues in its mission to nurture and guide the online journey of India's small businesses. So that's the comment that's coming from Snapdeal. Shanti or Saurabh, you want a quick comment on this?
Well, I mean, let me just put aside. Snapdeal, of course, would need to make that sort of comment, and it's a fair comment. But I do think one part of it, which was relating to what I was saying, is I think, to my mind, the model in India that would actually sweep the market and become invincible is the one that leverages all of the things that have worked for Amazon abroad and Walmart abroad to the unique circumstances of India and to exactly how the Indian consumer, on the average, will behave and will buy. And also what will enable them to grow without too much friction vis-a-vis government sort of formulations. So if you look at how can you rope in all the kirana stores, it's a big issue. I think it will make a difference on who manages to get that right. If you look at how you will actually handle deliveries in remote locations. I mean, it's okay if you just want to burn money, but right now all of the e-commerce companies are bleeding because they have models that are simply not going to be profitable at a unit level for a long time. And the Indian market is not going to be very forgiving on that. So I think there will be approaches and efficiencies that will come in. If I order something from Flipkart or Amazon today, which I have done in the past, just 5 packets of food, which just cost, which I ordered some pasta or whatever, of $100, $200 each, they arrive in 5 different packets on 5 different days.
Sure.
They're never going to make money on it.
So the efficiency, No, I get what you're saying. But once again, for the benefit of our viewers, let me very quickly recap the rationale behind why Walmart has decided to go with Flipkart in India. As I was pointing out, this decision fits within Walmart's larger international strategy. This is the strategy that Walmart is trying to follow in other markets. They've done this in the UK as well, and this is what they're hoping to do here in India. They're hoping that this will transform India's e-commerce market. They believe India is a compelling growth market with long-term potential. So again, as I was pointing out, they do expect headwinds on the EPS front in the short term, but in the long term, they believe that this deal will be value accretive. The total retail over the next 5 years, they expect the Indian e-commerce market to grow 4x. That is the expectation. That's the bet that Walmart is putting its money on. Again, in terms of numbers, just to give you an indication of the size of Flipkart, an annual GMV, gross merchandise value of $7.5 billion, 54 million active customers, and 261 million units sold in FY18. So this is the latest numbers. Of course, Flipkart maintains its leadership in fashion, mobile, electronics, and large appliances. So let me start to get wrap up comments from each of you. And Mr. Das, I will start by asking you, and I'd request each of you to be as precise as possible. the number one opportunity that you see on the back of the coming together of Walmart and Flipkart, the number one opportunity as well as the number one challenge?
Well, I think the number one opportunity, obviously, for the Indian consumer is competition. Competition is always good for the consumer. The second biggest opportunity is for the Indian supply chain, the chain from the farmer, and no one so far has done fresh in India. That this will be the first major attempt to bring fresh food, and that is the DNA of Walmart, and that's where they are ahead of Amazon. In other areas, in e-commerce, they are behind, far behind Amazon. And so I personally feel this will not be an overnight transformation. They are the kind of company that goes for the long term, and because this is a world model for them. They've sold Asda in UK partly to pay for this deal. And I also think that it is a very good deal eventually for the Indian retailer, because the Kirana store will become a partner for this deal to succeed. And that will take some of the sting, of political sting, away, which was there before, because already over the last 3 to 5 years, they have shown through the stores that they have created for retailers, those are wholesale stores, they have created a lot of goodwill with those. And finally, I would just say that India should look at what Walmart has done for agriculture in China, in Philippines, in Indonesia, in Africa. And it has, that one intervention has had a huge impact. It's not small. That somebody suggested this is trivial. It's not trivial for the Indian farmer and for the farm produce that is lost in transit, that is lost on the field every day. It will not be easy. Ajay Dua is right. APMCs are there. They are cartels. They are politically backed cartels. They're not going to allow a competitor to come in. But eventually, I think the Indian consumer will be the winner in this whole game.
The Indian consumer will be the winner. Shanti, what does this mean for India's startup universe? What does it mean for future consolidation? What does it mean for India's e-commerce?
So I would begin by saying this is a big win for the Indian consumer, because I think a lot of money is going to come into winning the consumer. But for the startup ecosystem, it's a great story. It's a great goal for the aspirations of entrepreneurs who go out to build very formidable businesses. Of course, there will be a challenge on the integration of the online on the offline space, and Indian market is not easy, though it appears to be very similar to a lot of other markets. I think when you go down to the deeper detail of the market, there is a lot of differences in how you could win the market. But as a founder, it's a happy moment. I think shareholders are happy, the employees are happy, investors are happy. So I think it's a good time to celebrate for the Indian ecosystem.
Okay, time to celebrate for the Indian ecosystem. A win-win for all, says Shanti Mohan. Ashish, your big takeaways, and what would it be that you would watch out for?
The big opportunity, if I were Walmart, is to perhaps envisage a situation of skipping the organized retail. Of course, digitizing the supply chain. But I think in a country like India, there's a huge opportunity to be digital-first retailer, which perhaps hasn't played out in other markets. So I think that's an amazing opportunity. On the challenge, I think it's about on-the-ground execution and integration. The brass tacks are really, really important. I think that's important because would they have the depth of entrepreneurs to be able to execute the strategy? So I think that's really the challenge. I think from an overall market perspective, this is definitely going to enable a lot of people like me for my next venture. I won't have to through over-education on what is an employee stock option. The belief in employee stock option will be there. And I think it'll really help attract the right talent and to also invigorate the right talent in the industry.
Well, that is a good point that you make there, Ashish, and we wish you the very best of luck with your future plans. But Ajay Dua, you know, as we started by talking about the fact that obviously this deal enjoys political comfort. Otherwise, there was no way in hell that Walmart, after having burnt its fingers in India in the past, would have decided to put in $16 billion into Flipkart. Do you expect any regulatory issues? Of course, you know, the tax issues will probably have to be sorted out. As you pointed out, the tax department has also already been proactive. But do you expect any regulatory headwinds?
I'm not a soothsayer, but I do not rule out the opposition from Indian retailers, both in the e-market space as well as in the physical stores, you know, brick and mortar stores, that the opposition to this deal intensifies in days to come. Whether the government will intervene or should it at all intervene is a million-dollar question. The fact of the matter is that in India, the duality of the retail market will persist, while the e-market may multiply 4 times, as you said, and that's what Walmart and other foreign investors in this space are believing. I think the organized retail, which is in the brick and mortar stores, is also likely to increase by as much of a factor, if not more. And I say this because if the agriculture sector prospers, the farmer will have much more money in his hands to dispose of, and the villages in India have not yet got onto the e-marketing platforms. It will take time, given the constraints which we have, or including literacy, including penetration of internet and all those kind of things, plus the fact that it is not profitable given our physical infrastructure in the field of logistics, where be it roads, be it penetration of motorcycles for delivery and all that system. That's the reason why people are bleeding, as you yourself mentioned, in the e-market space. Logistics costs are huge, sourcing costs are huge. So we are going to see, and there is a limit to how much, howsoever deep your pockets might be, to what extent the marketers will be willing to absorb the losses. So we would have both the markets persisting, and I think the growth is going to be there, but challenges of the kind I mentioned will persist for quite some time.
Yes, let me bring in a quick word in from Harminder as well. Harminder Shani, we just heard Walmart talk about the rationale behind this deal, saying they expect the Indian e-commerce market to grow 4x in the next 5 years. What's the big bet going to be on the e-commerce landscape, given the fact that this is likely to be now a 3-way battle, or as Mr. Pai says, you know, Alibaba still inconsequential relative to the other two?
See, I think whether market is going to go 4x in 5 years, or whether it will grow 10x in next 10 years, because that's in line with how the economy is supposed to grow, right? At 6-7% inflation and 6-7% of nominal growth, we are going to double every 5 years as an economy. And within that, we have seen that the consumption, given that so many millions, hundreds of millions of people are starting to consume for the first time, I think that's going to grow exponentially. So it's a subset of all that. How much e-commerce takes out of it, I think that will all depend on how much money these people are willing to invest and how the overall infrastructure and the network works. But it will certainly grow faster than the overall market, and it will certainly grow much more than what it is. And if you look at the numbers of China, I think, I just want to say that when Thumbs Up got sold many, many years ago for some 100+ crores, at that point of time, even as a young MBA student, we all almost like gasping that how much money Mr. Chauhan has made. Like today we are gasping that how much money Bansals are going to make in this $20 billion deal. I think just wait for 10 years down the line and we will all believe they sold it very, very cheap. So I think that's what the potential
Okay,
is
you
Walmart.
believe
And
that
time
that
and
is so
again I'm
that-
saying Walmart is not buying what Flipkart has achieved.
Sure.
They are buying what they want to achieve in the next 10,
Yes.
15 years in this market. $100 billion
No,
business will not be
you're
a stretch
absolutely
if this is
right.
what they are targeting for.
You're right. Let's, on that note, let's listen in to Doug McMillon, the global CEO of Walmart, on the rationale behind this transaction.
Has leadership positions in some of the most attractive categories in the Indian retail market, including apparel, mobile, electronics, and large appliances. Myntra and Jabong come together to form a fast-growing fashion e-commerce platform. This is an important category to win, a positive when it comes to margin mix, and we believe this piece of the company is positioned well with India's growing middle class and relatively young population. The PhonePe payments business supports the growth and development of e-commerce, delivering innovation to merchants and customers to simplify transactions. This is an important piece of the puzzle when building an ecosystem, helping to deepen customer relationships through more frequent interactions and personalization based on insights into customer needs and wants. Plus, Flipkart's supply chain arm, eCart, serves more than 800 cities, making 500,000 deliveries daily. At Walmart, we're learning how to build and how to partner to build retail ecosystems around the world. India will now become a key center of learning for our entire company. With this investment, we're pleased to be making a long-term commitment to India's future. We believe we can be a force for good in the country as we work to deliver shared value. As we look to the future, we believe this investment will contribute to sustained economic growth, especially across India's agriculture, food, and retail sectors. Jobs will be created through development of supply chains, commercial opportunity, and direct employment. We'll continue to invest in local communities, partnering with Kirana owners and members to help modernize their retail practices, supporting farms through local sourcing and greater market access, and reducing food waste by improving waste management practices and investing in supply chains. Walmart is transforming globally to not only meet the needs of customers, but to exceed and delight them. New opportunities emerge every day, and we're moving quickly to stay out in front of change. We're harnessing technology, investing in people, and thinking differently about how to serve customers. India is a priority market for us. The investment will help us continue to serve our members in India, gain new customers, and create more opportunity for our associates. Now I'll turn the call over to Brett to review the financial implications of this investment.
All right, thanks, Doug. Good morning, everybody. As Doug mentioned, we believe our investment in Flipkart Group will position us to realize tremendous growth opportunities in India. Over the next 5 years, India's retail market is expected to reach approximately $1.3 trillion, and we believe that India will be a top 5 e-commerce market within the next 5 years. Flipkart has seen rapid growth over the past several years, and we expect this trend to continue. In the latest fiscal year, Flipkart had GMV of $7.5 billion and $4.6 billion in net sales, representing more than 50% growth in both cases. As you likely saw in our press release this morning, Walmart will invest approximately $16 billion for an initial stake of approximately 77% in the Flipkart Group. This investment includes $2 billion of new equity funding, which will help Flipkart accelerate growth in the future. We're in discussions with additional potential investors who may join the round, which could result in our stake moving lower, but we would continue to retain clear majority ownership. The remainder of the business will be held by Flipkart's existing shareholders, including Flipkart's co-founder Benny Bansal, Tencent, Tiger Global, and Microsoft. Walmart will finance the transaction with a combination of newly issued debt and cash on hand. Upon closing, Flipkart's financials will be reported as part of Walmart International's business segment. From an EPS perspective, if the transaction were to close at the end of Q2 FY19, we expect a negative impact to fiscal 2019 EPS of approximately 25 to 30 cents, which includes incremental interest expense related to this investment. In FY20, as we look to accelerate growth in this important market, we anticipate an EPS headwind in total of around 60 cents per share, comprised of operating losses of approximately 40 to 45 cents per share. That assumes minimal tax benefit for those losses in the near to midterm. This amount also includes about 5 cents per share related to amortization of intangible assets and depreciation of short-lived assets resulting from purchase accounting, which will only last for a few years post-closing. It also includes interest expense of approximately 15 cents per share. In the mid to long term, as the business scales and efficiencies are realized, we expect losses to decline and returns to improve. Given Walmart's financial strength, we anticipate the continuation of our current share buyback program while maintaining our strong credit profile. This investment represents a unique opportunity in a market with significant long-term growth prospects. We're investing in a local leader with strong leadership and a culture of innovation and service, and Walmart is aligned with a strategic and committed shareholder group focused on serving customers. So with that, Doug, Judith, and I would be happy to take your questions.
Thank you. At this time, we'll be conducting a question and answer session. If you'd like to ask a question today, please press star 1 from your telephone keypad, and a confirmation tone will indicate your line is in the question queue. You may press star 2 if you'd like to remove your question from the queue. For participants that are using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment while we assemble the queue. Thank you. Our first question comes from the line of Karen Short with Barclays. Please proceed with your question.
Hey, thanks very much. Just a quick question in terms of the operating losses. So we can all back into what that implies on a monthly basis in terms of operating losses, but wondering if you could just talk to the cadence a little bit in terms of how those losses have kind of cycled like from last year into this year, and then maybe talk a little bit about some of the ways you plan to stem the losses and the path to, greater profits, I guess.
Hey, Karen, I'll start. This is Brett Biggs. Thanks for joining. The losses that they've had up to this point, and we're not going to get into too much to the historical financials of the company and what we'll look at as going forward. As you said, when you look at our numbers, you can back in pretty closely to where we think the losses will be. As you can imagine, we're going to have to get into the business more, assess what we think we can do with the business. We've done a lot of that, obviously, before we've signed. Continue to learn in the market and continue to give you as good a visibility as we can going forward. As you know, we typically this time of year wouldn't even give any guidance toward next year, and so we've tried to do that because of this being a unique situation, but we'll continue to update that along with our company guidance as we go forward. Judith, you want to talk about
okay, thanks.
how you think about the business?
Okay.
So just in terms of kind of the business model, one of the reasons we've put the $2 billion of primary in as well is to allow the business to continue to grow for the future, and that's really important in this market. We believe there are synergies that we will bring, which over the mid to longer term mean that we'll see improvements in the operating model from them. But we're confident that they've got the right strategy and they're doing the right things, and this is really important to us, that the Flipkart team can continue to operate in the way that they have and make sure that the business is successful.
Karen, were you trying to ask a follow-up? Go ahead if you'd like to, please.
Oh, sorry. Yeah, I just wanted to ask, there's been a lot of kind of commentary in the press about the potential for an IPO down the road as well. I just was wondering if you could comment on that and if that's something that you think is viable and what timeline that might be.
Yeah, so we're not giving a timeline to that. We're just saying that we're supportive of management who would like to see that happen in the future, and there's no timeline associated with that at all.
Thanks, Karen. Robert, next question, please.
The next question is coming from the line of Matt Fassler with Goldman Sachs.
Thanks a lot. My primary question relates to infrastructure. Can you talk about the company's current distribution infrastructure and the kind of investments that you need to make to scale it?
Yeah, so they currently have quite a lot of investment already in the infrastructure. It's one of the things that's great about that business is it has a logistics arm to it and it's building it out. We think that one of the ways that we can help support the business is with our expertise in supply chain and e-commerce supply chains as well as retail supply chains. So that's one of the areas we're looking at. We took into account as we looked at this business that there will need to be some investment in that area, but we're comfortable that we've got the right level of investment in there.
And by way of quick follow-up, globally, you're a big player almost everywhere you do business in food. And Flipkart doesn't seem to have a big presence in food and consumables. Can you talk about your plans for that, for potentially changing that in the future, or do you expect the lines of business to be consistent with where they are currently?
The Flipkart team would say that they believe there is good opportunity within food in India, and you heard Doug talk about the opportunities for agriculture, for food within the whole Indian economy. So it is one of those areas that we're growing an expertise in, and we're excited about how we can help develop in the future.
Thanks, Matt. Robert, next question, please.
Next question comes from the line of Oliver Chen with Cowen and Company.
Hi, thank you. Our question was about the framework around this and thinking about the majority investment versus a partnership and how you approached the priorities there. And as you spoke to the retail ecosystem, what are your thoughts on those synergies and what best practices may be applicable to as you think about U.S. Walmart and your overall bricks and clicks and physical plus digital thoughts? Thank you.
Yeah, maybe Judith, I'll comment first on the ecosystem. I think China has been quite informative. If you look at how that market has developed and understand the relationship between e-commerce and payment, marketplace and e-commerce and payment, and then look at what this platform represents in India, we pick up a payment business, a margin business in apparel that's helpful, an e-commerce business, and last mile. And so it really was a unique opportunity to put all those pieces together. And over time, we think they'll be complementary. In the short term, we're racing to build scale, and so we won't necessarily lean into leverage. I think right now, speed trumps leverage.
Yeah, and just to respond to the point about why it's 77% and how did that come about, one of the things that was important to us here was to have some partners alongside us as well. So having Tencent, Microsoft and Tiger Global, who are already investors in this business, is really powerful in terms of the model that we're creating. We'll be run through an independent board who will help. We'll have some Walmart representation on there, but we think that that structure best will keep the entrepreneurial spirit of this business and help guide it strategically as well.
And Oliver, as we mentioned, we still are having discussions potentially with other investors that might come in on the round, which would be great. We'll continue to have control, but if we're at 77%, we're happy with that as well.
Thanks, Oliver. Robert, next question, please.
Next question is from the line of Peter Benedict with Robert W. Baird.
Yeah, hey guys, kind of a follow-up to that, just on the potential for additional partners to join, is that, from a timeline perspective, is that decided upon at closing? Should we expect, or could there be news on that prior to closing? Just kind of curious how that could theoretically play out.
Yeah, so we said we're in discussions with a number of people. We'll see how that plays out, and we'll let you know if there's any kind of updates on that.